Welcome to the Morningstar Series 3 Stock Picks. I'm Holly Black. With me is David Smith. He's manager of the Henderson High Income Trust. Hello.
Hi, Holly.
So we're talking about 3 stocks in the portfolio. Where would you like to start?
So if I talk about Diageo first, it's one of my biggest holdings in the portfolio. It's actually one that's been in the portfolio for many years. So we've just celebrated our 30th anniversary, and the actual Diageo was first bought for the trust back in 1997. So it's a very long-term holding.
Oh wow! Has it been in there the whole time, or have you?
For the whole 22 years. So it's been, it just shows you when you find a good quality company. You can hold on to it for the long term, and it's because it consistently delivers good returns. And you look forward and you look at the quality of the business. It owns good quality alcohol brands in good growing categories. What I like about the business, the management team that came in a few years ago now, they're really investing in the company to continue to drive that growth. And that's what we like about our businesses. We want them to invest to grow into the future. I mean, some people, misconstrue income investors that we just want the cash flows paid out as income. No, we want a company to invest first, and any excess cash flow beyond that investment comes back to shareholders in income. And we think that growth can continue as it has done in the near future.
That is a real case of running your winners, though. Do you ever trim some profits out of it?
You do. You obviously got to keep mindful of where the valuation gets to, and when the valuation comes back, you always add to it, and when the valuation gets a bit toppy, you maybe trim a bit of the holding. But again, I think it just gives you an example of a good company that continues to invest. I'm happy to own those for the longer term, as long as they keep doing the sensible things in terms of that investment.
Super. What is stock number 2?
So Bodycote. So it's much more recent purchase. We bought it in October. And you look at the business, it provides heat treatment to metals to improve their some of their properties, such as strength and durability. And I think what we like about the business is, it's moving the business more in towards specialty technologies. So having the expertise in terms of what they do to work closely with certain customers, and it's a much more higher margin and much more valuable business. And I think as that business grows, it means the overall margins of the company can further increase from here over the longer term. Now, it is cyclical. It has come under some short-term pressure from the downturn in manufacturing. But I think if we are more towards the bottom of that downturn, people will look through that and look through towards the recovery as we go through in the next 2 years, really.
Super. And what's our final stock?
The final stock is National Express. So it's quite an interesting one where you talk about National Express, everyone thinks about the coaches in the UK. Actually, that's only about 10% of the business. It's a very well-diverse geographical business. It operates buses both in the UK, in Spain, Morocco, and also the US as well. And again, it's sort of similar to Diageo. What do we like about the business? It's investing, and it's investing in a few areas, really. Firstly, to make sure they deliver very good service quality. They're also investing to improve operational efficiencies, but they're also investing to supplement organic growth through bolt-on acquisitions to, in core competency in what they already do. And I think the combination of that means that the management team have been able to grow earnings, certainly over the last 6 years, by 10% per annum. But despite that growth, it's only trading on 12 times earnings. Which I think is too cheap given the consistency of the growth the management team have delivered. So once the market gets accepts that growth is here to stay, then I think you should see a good re-rating in the shares going forward.
And is Brexit a concern for any of these stocks? Obviously, domestically focused businesses are unloved and under pressure at the moment.
Yeah, well, I think the 3 things about all those businesses are that they have the majority of their businesses overseas. So, I think the outlook for them is less to do about the UK political situation and Brexit, and more to do about how they run the business for the longer term. And I think that's always the way I think about companies is, what does the company do? How does the management team drive profitability, and what the valuation is telling us? Valuations will move up and down depending on sentiment around political situation. But I always use that as an opportunity to buy or sell companies because I'm looking at more longer term dynamics than that.
Well, thank you so much for your time.
Pleasure. Thank you very much.
And thanks for joining us.